Alright, let us first see the option chain. What has happened to the premiums? Now you can tally with all the option strategies that we have discussed as an example. So see here. All red, red, red everywhere. Okay. So the price has expired. Nifty price expired at nearly 340. 18,340 is the expiry price. It means that all the calls above 18,350 should become zero according to our calculation of call and put. All the calls above 18,350 should become zero, isn't it? Because that is the strike price and the price expired below the strike price. We want the price to go and exceed the strike price, then only we would be having some premium. So call expiry of 18,300 will have a premium of around 43 rupees. Call expiry of 18,200 which settle at a premium of 143 rupees. How? 18,343 minus strike price. That would be the premium settlement price. See here. Got it? 143, 43. That's how all these are there, and this is all 0, 0, 0. Clear? All the them have become 0. So that is the time value in a particular option. So not just your target has to be met, it has to be met before the expiry time. That's why it is very difficult to make income as an option buyer. It's a difficult thing to make income as an option buyer. On the right side, when you observe, all the puts below 18,300 would become 0. Would you dance? Hold on. Hello. Yes, Amit. Good morning. Could you just type me.google.com and then provide this code manually? Yeah. Just go to the home page of Google Meet and then enter this code what I have shown in the URL. Huh. So all the put below 18,300 should become 0. See here. 18,300 put 0, 0, 0, 0, 0. It doesn't show 0, it shows 0.05, but it is 0. All these are 0 only. Even though it is 10 paisa, but the settlement price is considered to be 0. Alright. So this is those who ever sold options here, they have benefited in both the legs. What is that strategy called as? Short strangle. What is it called as? Short strangle, which we have already discussed. See here. Sell, call and put of OTM strike price. That time the premium was 10 rupees and 10 rupees. Now what has happened to 18,600? Call expiry. What happened to 18,000? Put expiry. See here. Both of them have become 0. 0. Last traded price 0. So what has happened? This was the maximum profit expected and they got it. Because the price expiry is in between of this. So those who ever did this strategy, they benefited 20 points into 50, that is 1,000 rupees they got in a matter of 3-4 days. And those who did this, they lost. And what happened to this guy? Just hold on, someone is trying to log in. Alright. So here the strategy short Nifty 18,400 call expiry and 18,400 put expiry. Both of this premium together, what we sold is 190. Would we be in profit had we taken this strategy? Let us calculate. So what has happened to 18,400 call expiry? It has become 0. This has become 0. So full 60 points we have gained there. And 18,400 put expiry has become 56 rupees. We have gained another 60 rupees here. So those whoever did this has made a jackpot income. Because together we sold it for 190 and now we would be buying on the settlement price at around 54 rupees. So for 60 rupees risk, you could have set even a stop loss. 250 point stop loss in case the market moves in one direction. You would have benefited by 130 rupees, double the reward. You have to set a threshold that at a particular point if the market goes away, I would exit. But never that kind of scenario had come where the market moved one way. That means comfortably the short straddle and the short strangle, both of them have made money comfortably. 80% it will happen like this. But 20% of the time it will give you sleepless nights. This scenario may build up. I'm expecting this week a big movement to come. Or this may build up. Moment is likely to be on the upside. What can we do in such a scenario? Now 17 November contract is over. The next contract we have it is 24th November. My view for the market is that it may rise, but I do not want to take huge risk. I want to have a better risk to reward. So what I will do, 18,600 call I may buy, or 18,500 call I may buy at 60, and 18,600 call I may sell at 30. When you compute the profit loss report, you will be able to see that the risk is only 30 points, but the reward is 70 points. When you continuously do options, you don't require calculator, you don't require Excel sheet, you don't require any notepad. All the profit loss should be running in your mind. I did not do any calculation, no break-even point, nothing. But you can tally this. I'm saying a strategy, 18,500 call, buy at 60, 18,600 call, sell at 30. So when you do this exercise, when you are free, just see it, risk will be 30, reward will be 70. So such kind of strategies we have to implement. Your view may go wrong, but how much do we lose? 30 only, right? Half of the time you'll go wrong, half of the time you lose 30, 30, 30, 30 likewise. But half of the time you will be right. But while you are right, you will be gaining not 30, but not even 60, but 70. So 50% losses and 50% gains. Even if you are able to bring that kind of equilibrium, you will be able to make huge money on your capital. And 50% is basic thing. I would say that technically if you are sound, we are going to begin with technical analysis now. If your chart reading, your entry and exit points are good and your strategy that you have framed is at the appropriate time, you would be gaining 60% of the time. Even with 50% you make money, with 60% you will make extraordinary income. Give the headline as technical analysis. Alright, so what exactly is technical analysis? The art of predicting the price movement based on the chart reading is termed as technical analysis. The art of predicting the price movement based on the chart reading is termed as technical analysis. the technical analysis is universal to all the markets and asset classes, meaning it does not matter. Quickly note it down. Alright, so technical analysis. What is the exact meaning of technical analysis? First of all, technical analysis was started by the Japanese rice traders more than 400 years back. So this is not something new. It is very, very traditional. So Japanese guys who used to trade in rice, they wanted to forecast how the movement of the rice is going to be. So they used to draw these kind of patterns on the sand, how the price is moving. They used to connect the dots and then forecast where are we likely to move. An example, if something is in demand, see everything moves in waves, whether it is your real estate or whether it is your let's say stock market or whether it is gold, everything moves in waves. But if you come across a pattern like this, I'm coming back to 400 years wherein the technical analysis had begun and simple chart patterns used to be found. So by looking at this chart pattern, you yourself will be able to know what is likely to happen. Okay, something is moving like this, then it takes a dip, then it moves like this, then again it takes a dip, then it moves like this. What are you going to do at this point? You see that the rice price from $100 has become to $150, has gone down to 130, has gone up to 200, has come back to 150, then starts slowly moving to 155. What are you likely to do here? Obviously, we feel that the price is going to rise. So we are expecting probably the movement to be like this. This is likely to be the pattern. That's how we forecast. Alright, so at this point, it looks like if we lose, we may lose only 2-3 rupees, but if we gain, if this kind of wave comes again, then we would make a huge income. That is how basic chart patterns are. But these basic chart patterns also bring a lot of value, guys. In fact, I believe in more simpler patterns rather than complex patterns, what people generally refer. So we see that every time the action is bigger than the reaction. The action is bigger than the reaction. It means that the demand is more than the supply. Demand is more than the supply. This trend may continue. There's no guarantee that it would happen. There's only a probability. Technical analysis is all about probabilities. There's no assurance. There's no surety. But what will happen? Maybe half of the time you will go wrong. But your entry is going to be perfect. If this chart pattern does not meet and rather it goes like this, then anyway we are exiting out here itself. So we are going to lose only little bit of amount, but in case if things happen as it has happened in the past, then our reward is going to be double, triple than the risk that we have taken. So overall, like this 100 trades, if I take it, even if I am right 40% of the time, you should be right at least 50%. But let us say only 40% of the time you are right. Even then you will end up making huge income. You can put these numbers in the Excel sheet. You are losing 1 rupee 60 times, but you are gaining 2 rupees 40 times. So plus 80 minus 60, you are still gain 20 rupees. So like this you can take 10 trades every month or every week. And this money, if you keep on compounding within a year, it can be a fantastic return. This is the example on the upside. The beauty is that you can play even on the downside through derivatives. We know the derivatives subject. We know that what kind of strategies we need to create when we are expecting the price to fall. And when will you expect the price to fall? Something is moving like this. Somewhere here you can enter, expecting that the price will collapse like this. This is called as downtrend. Okay, very important point. You are expecting this to happen. Your stop loss would be here. In case that you have shorted, you have sold it at 100, then 98 maybe, sorry. If it is this is 100, this would be 102 because you are on short side. So if you have sold at 100, your stop loss would be 102, but target could be, we'll calculate what should be the ideal target for it. But just by looking at prima facie on the chart, if you see, the reward is much bigger than the risk. If at all this pattern plays out. What are the chances? Maybe only 40%, 45%, 50%, maybe 60%. So that skill we need to develop, how to get minimum 50% success ratio. Then rest, everything is like probability game. Half of the trade if you lose, half of the trade if you gain. But if your entry and exit is perfect, you will end of the day you'll be able to make income. There is no technical analysis or no expert in the whole globe who has got a success ratio of more than 80% in technical analysis. That means be prepared that out of 100 trades, minimum 20 will get failed, where the pattern will fail and it will hit the stop loss, and maybe after hitting the stop loss then the pattern will play out. We never know. But one thing we are sure that whatever that we anticipated, the chart pattern is not moving in that trajectory. If you do not exit here and you, let's say the pattern after you have entered may turn out like this. You may say that, okay, from here, sir, the price is now likely to move like this. Don't ever have hope. It may happen, may not happen. But what if this happens? You'll be blown out. Your reward was this, but your risk is higher than the reward. Like this, couple of trades will eat away your 40-50 trades profit. So one thing very important for a technical analysis is to accept the mistake. Always market is supreme. You cannot argue with the market. There's nobody to answer you if you ask the question why the pattern went like that. Nobody is going to answer. You yourself are answerable. You'll have to accept that it was your mistake. And I'll give you best example. Corona. During the year 2020, when the market was continuously falling on the bad news of the corona and the deflation, all of a sudden market started rising and it rose sharply even though we had a lockdown. So those who ever expected that the conditions have become worse, we are under a lockdown, the banks are in mess, the employees have gone away to their home, so there's no labor at factories to work. Thinking all that, if they were hoping that it will turn like this from here, it will turn like this from here, it will turn like this from here, let me tell you, it went away 5,000 points. Nifty. This big thing went cross 5,000 points. It means that your 100 trades of profit would have gone into a single trade in case you did not exit at the right point. Most important in technical analysis is stop loss. The experienced traders, they say it as happy loss. Why? Because it is small. So when these small losses, when you take, it doesn't give you pain, it means that you have matured as a trader. You are matured as a trader. 100 rupees loss you would have made. Let's say that you have started with a capital of 10,000 rupees. First trade, 100 gone. This shouldn't be a pain at all. If these things are hurting you, that means you are emotional. And believe me, in technical analysis, you need to trade like a robot. You need to trade like a machine to be successful. There is no room for emotions. There will be series of profits. Back to back 10 profits will come. According to probability theory, if you take 1,000 trades, at least once you will be getting this event wherein continuously 10 times you will be in loss, continuously 10 times you will be in profit. But your strategy remains the same. Just like a machine, you keep on doing the same thing like a labor, same thing. Do not change your strategy based on the outcome of the trades. If the worst time will come, good time will also come. Have patience. If the good time has come, be mentally prepared. Worst time will also come. But what is the outcome of those 100 trades, 1,000 trades that you have taken? In total, always check in total. See, I have always told you, In a cricket team, every player is a great player. Every batsman has got a potential to hit century. But they don't hit century in every match. Virat Kohli gets duck out. Are we disappointed? No. End of the day, what do we want? In total, India's score should be good. Someone has to play. Likewise, even in technical analysis, don't attempt to make profit in every trade. Group the trades, 100 trades. In total should be in profit. Like that target you need to set. And most importantly, no room for emotions. Very important point, note it down. There is no room for emotions. So whether it is intraday trading, whether it is positional trading or hedge trading, whatsoever, the rules remain the same when it comes to technical analysis. Very important statement. Right now, your mind may say that, sir, I am definitely going to follow it. But I give you in writing. I am giving you in writing, I am challenging you. You will definitely go and break this rule. I've been into the market since 16 years. I know how the feeling is when you are playing with your money really. Theoretical is theoretical. But when you jump into practical, it is playing with fire. Every rupee lost will hurt you. Back to back, 3-4 trades gone wrong. You will definitely make a mistake and you will go out of the way. So take this as a challenge and prove me wrong, then definitely you will be a good trader. I would be more than happy to be a loser in this challenge. Let's see. So this is an art which comes only over practice. 1 month, 2 months, 3 months, 6 months, 1 year, 2 years, when you do it, then you will be trading like a machine for sure. But that 2 years of painful journey, how are you going to handle it? That time will tell us. Now in technical analysis, first of all, there are 7,000 companies in our exchange, plus there are some 1 lakh companies globally, and plus there are hundreds of instruments like the crypto coins are there, then you have commodity, you have got gold, silver, even on diamonds people trade. So many places are there where buy and sell can be done. Even forex is there, US dollar rate, or you can even trade in dollar, pound, dollar, yen. Cross currency trading can also be done in India through the demat account itself. So there are thousands and thousands of charts that can be seen. But how do you know where the big pattern is being played and how do you choose the stocks? Remember fundamental analysis that we have done. I am going to show you a screener wherein you will only get fundamentally strong companies. So for us, stock market is only those selected companies, maybe some 100 companies are there. What is happening in outside those 100 companies, we are least bothered. For us, stock market is only those 100 companies. And in those 100 companies only you will be seeing the chart and you will be timing the entry and the exit. Always look for such kind of entry wherein even in case the pattern fails, that means you'll have to exit in loss, which is called a stop loss. It has to be very small compared to the potential target. So according to the chart pattern that I'm seeing for some company ABC, entry is at 100, stop loss comes to be 98, and according to the previous chart pattern, the waves and everything that I see, the target is likely to be 110. So for every 1 rupee risk that I'm taking, I have a reward of 5 rupees. So this is an ideal setup. So minimum it should be 1 is to 2. For every 1 rupee risk, if there is a chance of making 2 rupees profit, then only we would enter, otherwise we would skip and choose the next company. Every day you will be getting one beautiful chart to trade, even in the shortlisted stocks. Just trade that one, sufficient. Alright? Risk management is very, very important in technical analysis. Right now. Next important point. Write it down. Alright, so let's say you are starting with a capital of 1 lakh. You say, sir, I have 1 lakh and I want to be a good trader. First condition, no matter how much ever confident you are for any chart pattern, no matter you may not have seen that kind of pattern in the last 2-3 years in your life, and you are very confident according to all the data points and the study that you have done that this price is likely to shoot up big. Even in such conditions, we are not going to risk more than 2% of the capital. Please do not be greedy. I've seen people risking 10%, 5% of the capital in a single trade. If it works well, it is a lottery. But if it doesn't work well, remember you require 20, 30 good trades to cover up that loss. So you are losing time, you are losing money. And then what will happen to your confidence, I do not know. That's why I told you. Trading like a machine, to say is simple, but when you really jump into it, then you'll realize it. When you are outside the swimming pool, it looks very easy that swimming can be done, just you'll have to move your hands and legs. But when you get into the water, you realize how risky it is. That is how even trading is. All this note theoretical, your mind is fixed. Yes, sir, I said this, we have to do it. Some experienced guy has said that who has already been trading since years. For sure, these rules are important, and you'll realize it over a course of time that every word here is very, very important. Right now, your mind may also be agreeing to this, but when you start taking trades, definitely that deviation will come. This is not your problem or my problem, this is the human psychological problem. Your mindset changes with outcome. An example, Virat Kohli is a great batsman, right? There's no doubt about it. But back to back, if he doesn't play well and he starts getting fired, and all the critics come up in the media, like say his captainship, already people have started raising the fingers. then he will not be able to perform to his best. Agree? And in case he is motivated, no problem, Virat, what's over is over. Now look forward. Maybe his performance will get better. That is what is motivation. So likewise, even here, when continuously you are losing the money, your human psychology will get affected. That is where you need to have self-control. Let's see who can come out of it. So be very careful. It's a dangerous game. You are playing with your money. It is playing with fire. You may blow up your capital also in case you do not have self-control. So start with very less capital. First do paper trading. So there's no hurry to make money. We have the entire life to live. Market is not going to go anywhere. Even after we die, the market will run. So 1, 2 days, 1 week, 2 weeks, 1 month, doesn't matter. Do only paper trading. So this is the pattern I got. In case I had money, I would have invested 10,000 in this trade. I would have invested 5,000 in this trade. This would be my stop loss. This would be my target. Like this, practice at least 100 trades. Then see the outcome in the Excel sheet. That is what is the report card. That is what is the performance. This is what is your examination result. And see if you are able to attempt the trades appropriately. In total, you see that there is a fantastic return. You have lost only small amounts when you were wrong. You have gained big when you were right. And you have gained at least 40-50% of the time. Then confidently take money and trade. Clear? Whether it is intraday, whether it is hedging, whatsoever, the rules are common. I repeat. Any asset class you are trading, American markets, Forex, Indian markets, rules are the same for technical analysts. In fact, you believe it or not, for a technical analyst, any technical analyst, he will never ask you which company is this. He will never ask you. He just wants to see chart, chart and chart. So for a technical analysis, the chart pattern is everything. On the top, whether it is Reliance, whether it is Nifty, whether it is American market, whether it is dollar, whether it is real estate, doesn't matter to him. He only wants lines, that's all. So that is a sign of a matured trader. Any technical analyst, you give the chart pattern. If he's asking for the company name, you can be assured that that guy is not well experienced as a trader. A good technical analyst will never ask you that. He will only tell one thing. According to this chart pattern, this is likely to happen. Clear? Got the point? Now, there are so many. Technical analysis is an ocean, guys. There are thousands of traders who have written books on technical analysis. Thousands of traders. And everyone has got their own understanding of the chart, their own opinion on the chart. They have got their own track record. If you dig into Google, you can get the entire encyclopedia. There's an encyclopedia on technical analysis. See, there's a book itself. Such thick books. It will take at least 2 years to read it. So many chart patterns, so many chart patterns. So roughly 1,000 pages, see here. So do you think after reading all those possible chart patterns, you will become the master in technical analysis? Let me tell you, you will become the worst trader if you are reading all the chart patterns of technical analysis. Very, very important point. It's just like saying you want to master how to prepare a biryani. You want to make the best biryani in the world. What you will do? Go to 10 different chefs who are expert in biryani globally. 10 different chefs and learn the recipe from them. Would you be able to make the best biryani in the world then? Not biryani, probably you may be able to make the best khichdi in the world. Got the point? That is what I am trying to say. If you are learning all the chart patterns, you will totally get confused because half of the patterns will tell you to buy, half of the pattern will tell you to sell. You will become mental. So I've seen people, they are trying to read everything in technical analysis. That is bad. Just like saying you want to be playing cricket, you want to be a master in soccer, you want to be a master in rugby, and all the sports game you want to be expert. You will be nowhere. Jack of all trades, master of none. That is how you land up. Learn only one and become expert in it. There's only one. See, a beautiful saying by the great boxer. So what he used to say is, I never feared. The champion of the boxer says that I have never feared my opponent who has practiced thousands of kicks. I have never feared the opponent who has practiced thousands of kicks. But I always feared my opponent who has practiced a single kick 1,000 times. This is what technical analysis is also. You learn only one but become master in it. Music. You like guitar, you like violin, you like Casio, whatever instrument you may like. Entire life only play that single instrument, only play that single instrument, then only you'll get the grip. With closed eyes also you'll be able to play fantastic melodious music. This is also the same thing. See, doctor, there's an heart surgeon, there's an orthopedician, there's a doctor for the child. Everyone is expert in their own subject. A great doctor of bones may not be able to operate the heart, and heart doctor may not be able to operate the lungs, but they are all great doctors. Likewise, in traders also, every trader is a great trader who has been successful, but everybody has got their own chart pattern. They don't mix it up. Sachin has got its own style, Kohli has got its own style. Neither they can copy each other's style, but they are both great batsmen. So is Dhoni. Likewise, you have your own setup. We are definitely going to follow one particular chart pattern by some great trader, but we will only be following that, we will not be deviating from it. I told you 10,000 instruments are there, 10 or millions of instruments are there. Why do you want to lead everything? If you are able to get in that single chart pattern kind of reading, if you are getting multiple stocks, only trade that. So there are two things that we are going to learn. For investment, what chart patterns have to be seen, and for short term trading, intraday or maybe weekly, maybe positional, what chart patterns have to be read. So one such trader that I follow and where learning is easy and the success ratio is high is Mark Minervi, VCP patterns. He is the guy. He has got 2 books. In case you are interested in reading the books, I would be sharing you. These are all the 4 books he has got, but these 2 books are very, very important. So whatever the knowledge of technical analysis that I am going to share with you in the coming days is the outcome of these 2 books. He has won lot of championships in the history of trading. He has been one of the great trader, and you will be getting good results while you are attempting these trades. So very, very simple pattern, only price action trading. So the structures are simple, no complex structures, and I want you to follow him. Most of the time his market opinions go right. Whenever he feels that markets look dangerous, he will be cautioning you, and most of the time you'll see that markets even falling from there. So follow him on Twitter. He has got great fan following, and he has literally printed money like anything. He has grown his wealth with more than 60% CAGR as a trader. Of course, has been a short journey. Maybe another few years that he continuously does that, he should be one of the billionaires in the world, coming in the top 100. Even now, he's in the elite class, but not in the top 100 billionaires in the world. But amazing
Sanjay,
strategy, amazing guy.
sorry to interrupt you.
Yes, please.
Yeah, which 2 books, like you said?
One is the market wizard and
Okay.
trade like a stock market wizard, and trade like a champion. So this
Okay.
books links up. Okay, you are attending today. To the other students, whatever the zip file that I've shared of the books, these books are already there in it. So in case you haven't downloaded, with the Google Drive link, you'll be able to do it. So whatever that concepts are there, though I am already covering up in the training, but in detail, if you want everything, then you may refer these books. These two. Okay, this is only the Market Wizard. The other book is in the other link. There are several books here which I feel are really good. You should be able to download at your end. Alright. And all my class notes, material and all would be available here. Both these links are already shared. In case you haven't got it, kindly ping me on WhatsApp. I would be sharing with you. This is also a great book, Darvas Box Trading, which is part of Minervi Trading. Within his strategy, there are some 7-8 other strategies which is already included. So it's not just a single pattern that he looks for. Some 4 to 5 patterns are there. 4 to 5 chart pattern setups are there. Only trade those 4-5 chart pattern setups. That's all. Within that, one is Darvas box. Okay. In detail, we'll be checking all that and we'll be attempting those trades. We'll be practically trading those instruments. Okay. So now note down what are the two things that we are going to do in technical analysis. So firstly, technical analysis for investment. When you would want to buy a stock to hold, when you would want to buy a stock to hold for few years, then always follow the demand and supply theory on the monthly chart. Please note down. Alright, so in technical analysis, you are going to find chart patterns of various types. So let us see quickly what kind of charts do we have. So this is the most widely used. This is all candlestick patterns. Okay. There will be green and red color candles. What does it signify? See, like this kind of charts. What this candle signify? All that we'll be discussing tomorrow's session. But based on these chart patterns and this kind of grouping of candle formations, we will be attempting a trade. Okay, you know what bullish is? That means expecting the price to rise. Bearish is expecting the price to fall. Okay, and within that there are various names given: ascending triangle, descending triangle, and all that. Okay, all that we'll be learning. And then you have point and figure chart. So OXO, that's how this marking will be done. Okay, you have bar chart. Bar chart looks similar to candlestick, but the body is a single line like this. This is a bar chart. This is a pure bar chart. Okay, like this marking will be done along with the lines. Then you have the regular line charts. This is hopeless. You won't understand anything with these lines. I'll tell you what is the drawback with the line chart and what's the advantage with the candlestick when we begin with the chart patterns in tomorrow's session. Okay. So line chart will only connect the dots of the closing price. But what happened during the day will not give you that information. Example, let's say that Nifty has opened at 18,300 today. But there was sudden good news that our tax collection data has been really good and Nifty moves up by 18,500. That means 200 points it has moved up. Later a bad news comes that Russia has attacked Poland with a missile. Again that 18,500 becomes 18,300 by the time we close the market at 3:30 p.m. You know what it will show in the line chart? Just a dot. That today price was at 18,300, it closed at 18,300. But in that dot, what happened, we don't know. That candlestick will tell you. So during the day, how the journey of the market has been, that information also we need to have in order to attempt a trade for tomorrow. Then we'll get to know whether it was bulls who won or whether it is bears who won. See, Samudra Mantham. Sometimes this side is powerful, sometimes that side is powerful. So you need to take a balanced trade by looking at that action, what has happened during that game. There's a match going on. If you just are looking at end of the match score, you'll only know which team has won. But do you know who has played well? If you want a detailed information, what exactly happened in the match, how tough the match was or how easy it was a win for any team during the match, whether the match got one-sided, then again it picked up, you will not know anything. You only just know that which team has won. With that, you will not be able to bet in your next match easily. But just by looking at any particular team, whether this has won or lost, in betting you will not be able to make money easily in the next match. You should also know the information which player is under form, whether it is bowlers doing well or whether it is batsmen, whether it is middle order doing well in the batting lineup or whether it is the top order or the bottom order, whether in that particular pitch. Now just to give you an example, two types of betting players are there. Betting players, there are two types. One guy is overconfident who only believes in luck. He doesn't do any reading. Maybe he's very patriotic, he'll bet on India or whoever may be the opponent team. And one guy will be there totally anti-India, totally non-patriotic. Always he'll be betting against India. Sometimes he'll win, sometimes the other guy will win. It will be like a 50-50 probability game. But one smart guy, what he does is he looks at the entire past history. Where is the game being played? Who has played well? In which Indian player has did really well under such kind of pitch conditions? Who has won the toss? And whether the pitch conditions will become tougher for the second team, or is it tough for the first team? How much significance the toss will have over it? And which player has got a track record of hitting maximum runs, and all that reading, when you do it, then you'll have a fair idea which team is likely to win, which player is likely to perform, whether the score is going to be big or it's going to be small, looking at the pitch conditions. In a T20 match, whether even 150 score is sufficient to win, or 170 is needed, or 200 is needed, or 250 is needed. With all these data points, then you can confidently bet. Then betting you can do on the team, you can bet on the player, you can bet on the total score. Even after first innings you can bet. You are more informed bet. You'll be having more information on the bet. Likewise is this chart patterns. Now if you ask me, sir, where is NMDC going to go tomorrow? I don't know. It may go up or it may go down. Long term it can go up because fundamentally it is strong. But today what will happen to it, that no one knows it. For that I may have to look at the chart in the last 1 week, 1 month, in the last 5 days, in the last 1 year. Then I may, to an extent, I may be right saying that this is likely to happen. Then rather than being 50% right, I may be 60% right. That is how the charts are going to help you. But with line chart, you don't get that information. Line chart will only tell you what was the closing price, what is open price, what was the high for that particular time duration, what was the low, we don't know. So that is why we refer candlestick pattern. In candlestick pattern, we get in a single candle the entire action of the day. It's like highlights of the game. What has been the high, what has been the low, what has been the range, what has been the open, what has been the close. Open, high, low, close, also called as OHLC. Candlestick charts are also called as OHLC charts. Alright. So here you'll see that your outcomes are going to improve compared to the line chart. Of course, the patterns will be similar to it, but not exactly similar. There will be candles all around. Some will be big, some will be small. By that we'll get an idea of what exactly has to be done. Okay, it's already past 9, so that's all. With this, I end today's session. Tomorrow we are going to continue from here on, and we are going to look at several chart patterns. So it's all going to be only reading of charts in the coming few sessions. Any
Sanjay,
doubts or questions?
tomorrow is Saturday, so
We have session on Saturday also, Amit.
okay, okay.
Yeah. Sunday is off. Saturday we have session.